Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. We wish you a great year ahead. Today we're looking at Gold Resource Corporation.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. And I think the big question right off the bat is, why are we looking at this company right now?
Exactly. What's the catalyst?
It's all about the third quarter, Q3. They just showed this really dramatic operational turnaround. It's impossible to ignore.
Okay, so let's break that down. What does dramatic actually look like in numbers?
It looks like an 87.45% jump in revenue.
In one quarter?
In one quarter. They went from around $11.2 million to almost $25 million.
Wow. Okay, how does a miner even do that?
It was driven by much higher concentrate sales and really strong silver output from their main asset, the Don David Gold Mine. We'll probably just call it the DDGM.
Right, the DDGM. But I have to bring this up because you see the big revenue number, but then you see they still posted a net loss.
They did, a $4.7 million loss.
And that can scare people off. Red ink is red ink.
It is, but you have to look at the context here. That's actually a reduced loss compared to last year. The trend is what matters.
So the bleeding is slowing down.
Significantly.
Yeah.
And management is now out there signaling that they expect positive operating income for the rest of 2025. That's the inflection point everyone's been waiting for.
Okay, so it's not just about selling more. They must be getting more efficient, too. Let's talk about costs.
Yes, and this is maybe the most important part of the story. We're seeing a clear downward trend in their costs.
Okay.
Their cash costs are down to about $2,116 per gold equivalent ounce.
And the all-in sustaining costs, the AISC.
That came in at $2,983 per ounce. Both are moving in the right direction, which tells you they're getting control of the operation.
How, though? What did they actually change on the ground?
It's really about two things. New, more efficient equipment was part of it, but the big strategic shift was implementing cut-and-fill mining methods.
Explain that for us. Cut and fill. It sounds precise.
It is. Think of it this way. Older methods might just blast a big area so you get your valuable ore, but you also get a ton of worthless waste rock mixed in.
That's called dilution, right?
Exactly. And you still have to pay to process all that waste rock, which just kills your efficiency.
So cut and fill is cleaner.
Much cleaner. It's a more surgical method. They mine a smaller section, then fill the space with a stabilizer and move on. It means less dilution, higher grade ore going to the mill, and, well, your costs plummet.
That's a huge operational change, but it must have cost a lot up front. How did they fund all of this?
Yeah, that brings us to their financial strategy. They basically spent the year building a war chest.
And it looks like they were pretty successful.
Very. They've boosted their liquidity to over $9 million in cash.
How did they pull that off?
A few key moves. They raised $11.4 million through a registered direct offering. Another $8.6 million came from their ATM program throughout the year.
So selling stock directly into the market.
Right. And on top of that, they got a nice $4.2 million tax refund back in May. So the money came in.
And it looks like it went out just as fast. They're clearly in a growth phase.
Absolutely. Don't look for free cash flow here, not yet. They are prioritizing production ramps.
And the numbers back that up. Q3 capital investments were almost $15 million.
They were. And the crucial part is that almost $9 million of that was labeled growth spend.
Where did that growth money go specifically?
The vast majority, $6.6 million, was poured directly into the underground development of a new area called Three Sisters.
So that's where they see the future.
That's the bet. It also explains why you're not seeing dividends or stock buybacks. Every single dollar is being reinvested into growth. It's a classic turnaround playbook.
Okay, let's talk about that future then. What's the competitive advantage here? What's their moat in a very crowded field?
It really comes down to the Don David Gold Mine. Having operational control of a high-grade asset like that is key.
And it's not just gold.
Right. It's polymetallic,
Yeah.
gold and silver. Having those two revenue streams provides a natural hedge if one metal's price dips. It adds stability.
And the growth engine within that mine is the Three Sisters area you mentioned.
That's the crown jewel. The potential there is just massive. Their internal numbers show a 129% upside in the net smelter return, the NSR.
129% upside. That's a huge number. It signals some seriously rich rock.
It really does. And this is where their expertise in that cut-and-fill mining comes into play. They're specialists at getting value out of these complex, narrow veins that bigger companies might ignore.
And they aren't putting all their eggs in one basket, geographically speaking.
Correct. They also have the Back 40 project, which is based in Michigan.
That's a huge piece of diversification.
It is. It protects them from single asset risk,
Yeah.
any potential issues in Mexico. Having a high potential project in the U.S. gives them a ton of future options.
So how did the market react to all this? Did they buy into the turnaround story after the Q3 numbers came out?
Oh, they definitely did. The reaction was immediately bullish. The stock jumped 8.61% in after-hours trading right after the announcement.
A pretty strong signal.
A very strong signal. It shows the market believes this is sustainable, not just a one-quarter fluke.
And what are the charts telling you?
The technicals look pretty constructive. You're seeing the formation of higher lows, a big spike in volume, which suggests institutions might be accumulating shares.
Is there a key price level to watch?
Well, it seems to be building a nice base of support right around the recent offering price of 0 to 45 cents. That seems to be the level many see as an attractive entry point.
And what about the professional analysts?
They're optimistic. H.C. Wainwright, for example, set a price target of $1.25.
That's some serious upside.
It is, but you have to understand that target is based on them executing perfectly. It assumes they hit their production ramps and keep those costs down.
Which brings us to the other side of the coin. We have to talk about the risks. What's the bear case here?
The bear case is real, and it starts with liquidity. Yes, they raise money, but they've also burned through a lot. Year-to-date losses are around $24.5 million.
So the going concern question is still on the table.
It's always in the background. They are in a race against time, really. They need to ramp up production and get to positive cash flow before that capital cushion runs out.
So they are very dependent on high metal prices right now.
It's more than a tailwind, it's a lifeline. If gold and silver prices were to fall sharply, their margins would get squeezed, and that liquidity risk becomes critical very, very quickly.
Are there other operational risks to think about?
Yeah, they're not out of the woods yet. Their grades and tons for the year are still a bit lower than they initially guided for, and there are some unresolved tax disputes in Mexico that just add a layer of uncertainty.
So it's a real balancing act.
It is. The Q3 performance bought them time and credibility, but they have to keep delivering.
Okay, so looking forward, what are the next big catalysts? What should we be watching for over the next, say, 3 months?
The big one, without a doubt, is the Q4 earnings report. That should come out in early February 2026.
And what does that report need to show?
It needs to prove that Q3 wasn't a one-off. The market consensus is looking for continued positive operating income. If they can get close to break even on an EPS basis, that would be huge.
A huge milestone.
Psychologically and financially, yes. It would signal they're becoming self-sustaining.
What about outside of earnings? Any project milestones?
2 things to watch. First, any news on the permitting process for the Back 40 project in Michigan. Progress there is a big de-risking event.
And the second?
Updates from the Three Sisters expansion. We want to see that their growth capital is translating into actual development progress, getting them closer to that high-grade ore.
And there's always a more speculative angle to these stories.
There is. And it has to do with all the M&A talk in the gold sector right now.
You think gold resource could be a target?
It's not out of the question, especially as the Back 40 project moves forward.
Why that project specifically?
Because major producers are hungry for clean, U.S.-based assets. It reduces political risk. If Back 40 hits a few key permitting milestones, it could suddenly look very attractive to a bigger company looking to buy growth.
So to wrap this all up, the core idea here is that the Q3 results signal a real turnaround is underway.
That's the thesis. The revenue doubling, the costs coming down. It's a powerful story. It's a high-reward entry point, but it's not for the faint of heart.
It requires patience.
Patience and a stomach for risk. You're betting on management to execute over multiple years to really unlock the value in Three Sisters and Back 40.
So the narrative is really a shift from high risk to potentially high reward.
That's it. Perfectly.
Yeah.
And whether they get there depends entirely on sustaining those efficiency gains from the new mining method and turning the Three Sisters potential into actual profitable ounces.
A compelling story, no matter how it plays out. It's a true test of management.
It really is.
Thanks for breaking all that down for us. And thanks to everyone for tuning in. If you found this talk valuable, please subscribe for our daily analysis and catalyst talks. We'll see you next time.